Ever wonder why gold prices keep hitting new highs? Or why silver is suddenly so valuable beyond just jewelry? It's not just inflation, folks. There's a colossal shift happening, orchestrated by one of the world's biggest players, China. Precious metals like gold and silver aren't just commodities. They're powerful tools for national policy and geopolitical leverage, especially in uncertain times. And China has emerged as a profoundly influential player, being the world's largest gold producer and consumer, and a major silver player. In this video, we are uncovering how China's strategic moves in gold and silver are not just impacting prices, but literally reshaping the global financial system and challenging the US dollar's dominance. Get ready to understand China's golden grip. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. But first, a quick disclaimer. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. First up, let's talk about gold. China's central bank, the People's Bank of China, PBOC, has been on an unprecedented gold buying spree. Why are they doing this? It's a strategic de-dollarization move. They want to reduce their dependency on the US dollar. This strategy is fueled by rising US-China trade tensions and the 2022 freezing of Russian reserves, which showed how vulnerable nations can be if they rely too much on the dollar. Gold is a non-sovereign asset, meaning no single government controls it, offering a crucial buffer against US monetary policies and global volatility. It's also a safe haven for China amidst its own economic challenges, like property market issues and slower growth. The PBOC has bought gold for 7 consecutive months as of May 2025, adding 1.9 tons in May alone, bringing official holdings to 2,296 tons. But here's a kicker. Some analysts believe China's actual gold holdings could be much higher, possibly over 5,000 tons, suggesting covert purchases to build financial leverage without alarming markets. This isn't just investing. It's a calculated strategy to reduce global demand for the dollar and build a strong, independent financial buffer for China, paving the way for a multipolar international financial system. It's not just the central bank. Chinese citizens are also changing how they use gold. In 2024, gold investment in bars and coins hit an 11-year high, while demand for gold jewelry plummeted to a 14-year low. This trend continued into early 2025, with Chinese gold ETFs seeing unprecedented inflows, surging by 84 tons in the first 5 months of 2025. Why the shift? Gold's value in Chinese yuan soared by nearly 28% in 2024, making it a super attractive investment amidst sluggish economic growth and yuan volatility. People see gold less as a decorative item and more as a crucial financial safe haven or a tool for wealth preservation during uncertain times. And here's a new development. As of February 2025, Chinese insurers can now allocate up to 1% of their assets to bullion, potentially unlocking a massive $27.4 billion in new institutional investment. This shows a fundamental change. Gold is becoming a strategic financial asset within China's capital framework. China isn't just buying gold, it's building the infrastructure to trade it on its own terms. In a major strategic move in June 2025, the Shanghai Gold Exchange, SGE, launched new yuan-denominated gold contracts and opened its first offshore gold vault in Hong Kong. This initiative is explicitly designed to boost China's influence in the global bullion trade and reduce global reliance on the US dollar in gold transactions. The new Hong Kong vault will facilitate gold transactions in yuan, allowing China to import gold using its own currency, strengthening its influence over regional gold pricing, and encouraging trading partners to use the yuan. It's a sophisticated strategy. By building this yuan-denominated gold trading infrastructure outside mainland China's direct capital controls, Beijing is effectively constructing a parallel financial architecture. This helps the yuan gain legitimacy and international traction, subtly building towards a multipolar financial system. Now let's talk about silver, which has a unique dual identity. It's both a precious metal and a critical industrial material. While China's overall silver consumption tonnage decreased slightly in 2024, the revenue of its silver market notably increased to $12.9 billion, showing significant price appreciation. Globally, industrial silver demand hit a record 680.5 million ounces in 2024, with China accounting for the largest share of these gains, recording a 7% rise. Why is industrial demand so strong? Silver is indispensable in electronics, solar panels, 16% of global demand, medical devices, and even the electric vehicle industry, 2.9% of global demand. China's aggressive expansion in solar energy and 5G technology has directly led to increased silver imports. This isn't just about safe haven investment, it's fundamentally about China's industrial policy, supply chain control, and the global energy transition. China's sustained investment in these critical sectors ensures a persistent, structural demand for silver, linking its price performance directly to China's long-term industrial goals. China's actions aren't isolated. They're sending ripples across the entire global financial landscape. Impact on prices. China's systematic gold purchases create consistent buying pressure, effectively supporting price levels and establishing a higher floor for gold prices. Even short-term dips due to geopolitical de-escalation are often seen as entry points, aligning with China's long-term accumulation strategy. The multipolar shift, a historic pivot, is underway. Central banks worldwide are accelerating gold purchases and diversifying into the euro and Chinese yuan, signaling a clear lack of confidence in the US dollar's enduring dominance. Over the past 3 years, central banks have added over 1,000 tons of gold annually to their reserves. A record 95% of central banks expect global gold reserves to increase, and 43% plan to boost their own holdings. Crucially, not a single central bank plans to reduce their gold holdings. The Chinese yuan is gaining ground, included in the IMF Special Drawing Rights (SDR) basket. China is seen not just as a rival but as an architect of the next monetary era, aiming for a global financial system less reliant on a single currency and more on tangible value. Financial stability and geopolitics. China's de-dollarization strategy aims to bolster its own financial stability, but it inherently rebalances the global financial architecture. This rebalancing exposes vulnerabilities in other major economies that remain heavily dollar-dependent, potentially compelling them to diversify too. This is part of a broader economic divorce from the existing globalized system, where commodity markets are becoming battlegrounds for economic influence. China's control over critical raw materials like rare earths, 70% of global production, gives it significant leverage in key global sectors. Its actions in precious metals are part of a coordinated national strategy to assert comprehensive global economic and geopolitical influence. So, what does the future hold for China's golden grip? Long-term sustainability. China's gold market development is considered solid, ongoing, and for the long term, driven by its massive population, sustained economic growth, and a deep cultural affinity for gold. The new insurer investment program provides even more long-term support. Potential risks. While strong, short-term market corrections are possible if global inflation eases or US-China tensions significantly de-escalate. Also, emerging alternative safe havens like cryptocurrencies could introduce competition, and overly restrictive SGE policies could limit its global reach. Future developments. Future BRICS currency initiatives might incorporate gold backing, and a yuan with strong gold backing could play a leading role in a multipolar financial system as digital currencies and central bank digital currencies, CBDCs, evolve. To wrap it up, China's significant shift in the gold and silver markets is a deeply strategic phenomenon, driven by long-term objectives rather than fleeting market trends. Key takeaways. China's consistent gold accumulation is actively reshaping the global monetary landscape, accelerating de-dollarization and fostering a multipolar reserve system. Its robust industrial demand for silver underscores its pivotal role in the global green economy transition and broader commodity statecraft. These interconnected shifts have profound implications for global financial stability, forcing other major economies to reassess their own reserve strategies. The interplay between China's evolving economy, geopolitical ambitions, and calculated commodity policies will continue to dominate precious metals markets for the foreseeable future. This isn't just about commodity prices, it's about a fundamental reallocation of systemic risk and financial power globally. The world is changing, and China is holding a lot of the gold that's driving it. What do you think about China's strategy? Let us know in the comments below. If you found this video insightful, please like, share, and subscribe for more deep dives into global finance.